Please like and subscribe to stay well informed about the latest information and offers.
Real estate investment strategies for generating dividends. Investing in real estate has long been considered a lucrative venture, providing investors with a stable income stream through rental, yields, and capital appreciation. While traditional methods of property investment have their merits, the landscape is ever evolving, presenting new opportunities for savvy investors. In this article, we will explore the July issue of Forbes Real Estate Investor's newsletter titled Dialing for Dividends, which sheds light on innovative real estate investment strategies designed to generate dividends. We will delve into the key concepts, case studies, and expert insights provided in the newsletter to help readers make informed decisions. Understanding the evolution of real estate investment. Traditional rental income model. For decades, traditional real estate investment involved purchasing residential or commercial properties and generating income through rental yields. While this approach has proven to be reliable, it also comes with responsibilities like property management, tenant issues, and market fluctuations. New Horizons, Dividend-Oriented investment strategy. In recent years, real estate investment has witnessed significant transformations with a focus on dividend-oriented strategies. Dividends in this context refer to regular income streams generated from real estate investments, often through pooled funds and professionally managed platforms. Dividend-oriented real estate investment strategies. Real estate investment trusts REITs. REITs are companies that own, operate, or finance income, generating real estate across various sectors. Investors can buy shares of REITs, essentially becoming shareholders in a portfolio of properties. REITs offer diversification, high liquidity, and the potential for attractive dividends. Forbes Real Estate Investor highlights the growth of digital REITs, making it easier for investors to access the real estate market with lower barriers to entry. Private Equity Real Estate Fund. Private equity real estate funds pool capital from accredited investors to invest in commercial properties, development projects, or other real estate ventures. These funds are managed by experienced professionals who seek to generate returns through dividends and property appreciations. The newsletter discusses how these funds provide an opportunity for investors to diversify their real estate holdings and achieve higher returns than individual property investments. Real estate crowdfunding platform. Real estate crowdfunding has democratized real estate investing, allowing individuals to invest in properties with smaller amounts of capital. These online platforms bring together investors to collectively fund projects such as residential developments, commercial properties, or apartment complexes. Forbes Real Estate Investor outlines the benefits of real estate crowdfunding, including reduced barriers to entry, passive income, and portfolio diversification. Short-term rental properties. The newsletter also touches upon short-term rental properties as an alternative dividend-oriented strategy. Platforms like Airbnb have made it easier for property owners to earn rental income on a short-term basis. However, it is crucial to understand the local regulations and demand dynamics to ensure a successful venture in the short-term rental market. Analyzing case studies. Case study. The growth of REITs in the digital era. The case study presented by Forbes Real Estate Investor focuses on the exponential growth of digital REITs and their appeal to millennial investors. With a strong emphasis on technology and convenience, digital REITs have attracted a new wave of investors who seek to benefit from the real estate market without the hassles of direct property ownership. Case study. Private equity real estate funds and portfolio diversification. This case study examines how private equity real estate funds can be a powerful tool for diversifying an investor's real estate portfolio. By pooling resources across multiple properties and projects, investors can reduce risk and potentially achieve higher returns. Case study. Success stories from real estate crowdfunding. Forbes Real Estate Investor shares success stories from investors who have profited from real estate crowdfunding. These accounts highlight the accessibility and potential profitability of investing in real estate through crowdfunding platforms. expert insights from Forbes Real Estate Investor, mitigating risks in dividend-oriented investments. The newsletter offers valuable insights into mitigating risks associated with dividend-oriented real estate investments. Diversification, thorough due diligence, and understanding the investment structure are critical aspects to consider while navigating this market. The impact of technology on real estate dividends. Experts featured in the newsletter discuss the role of technology in reshaping the real estate investment landscape. The integration of technology has made it easier for investors to access real estate opportunities, enhancing transparency and efficiency. Conclusion: real estate investment is no longer limited to direct ownership of properties. Dividend-oriented strategies, such as REITs, private equity real estate funds, real estate crowdfunding, and short-term rental properties have revolutionized the industry. These approaches offer investors greater flexibility, diversification, and potential for attractive returns. As the market continues to evolve, staying informed and adapting to new trends will be essential for investors seeking to dial for dividends in the real estate realm. Frequently asked question: are dividend-oriented real estate investments suitable for passive income seekers? Yes, dividend-oriented real estate investments can be an excellent option for passive income seekers. REITs, private equity real estate funds, and real estate crowdfunding platforms allow investors to earn regular dividends without the active involvement required in direct property management. How do I get started with real estate crowdfunding? To get started with real estate crowdfunding, research reputable platforms and understand their investment criteria. Create an account on the platform of your choice. Complete the required KYC. Know your customer process. And review the available investment opportunities. Invest an amount that aligns with your financial goals and risk tolerance. What are the risks associated with dividend-oriented real estate investments? Like any investment, dividend-oriented real estate strategies come with risks. Market fluctuations, changes in property values, and economic downturns can affect the performance of these investments. Additionally, investors should consider the track record and reputation of the investment providers before committing funds. Can I invest in dividend-oriented real estate strategies with a small amount of capital? Yes. You can invest in dividend-oriented real estate strategies with a small amount of capital through platforms like real estate crowdfunding. These platforms often allow investors to participate in projects with lower minimum investment requirements, making it more accessible for individuals with limited capital to enter the real estate market. How do dividends from REITs and private equity real estate funds compare to traditional rental income? The dividends earned from REITs and private equity real estate funds can be competitive with traditional rental income. However, the specific returns will vary based on the performance of the underlying properties and the expertise of the fund managers. While rental income provides direct control and potential for value appreciation, dividends from REITs and funds offer a passive income with professional management and broader diversification. What are the tax implications of dividend-oriented real estate investments? The tax implications of dividend-oriented real estate investments depend on the country's tax laws and the specific investment structure. In many cases, REIT dividends and real estate crowdfunding returns are treated as regular income and are subject to income tax. On the other hand, private equity real estate funds may have different tax treatments, such as capital gains tax. It's essential to consult with a tax advisor or financial professional to understand the tax implications in your specific jurisdiction. How can I diversify my dividend-oriented real estate investment portfolio? Diversification is crucial in any investment portfolio to spread risk and potentially enhance returns. To diversify your dividend-oriented real estate investment portfolio, consider allocating funds to a mix of assets like REITs across different sectors, private equity real estate funds with varying investment strategies, and real estate crowdfunding projects in different geographical locations and real estate crowdfunding locations and different property types. What are some factors to consider before investing in short-term rental properties? Investing in short-term rental properties can be profitable, but it's essential to evaluate several factors before diving in. Regulations. Check local laws and regulations governing short-term rentals in your area to ensure compliance and avoid potential legal issues. Location. Choose a location with high demand for short-term rentals such as tourist destinations, business hubs, or event-driven cities. Operational costs. Factor in maintenance, cleaning, insurance, and property management costs associated with short-term rentals. Seasonality. Understand the seasonal demand for short-term rentals in your chosen location, as occupancy rates may vary throughout the year. Competition. Research the competition in the area to gauge rental rates and identify unique selling points for your property. Are there any potential downsides to dividend-oriented real estate investments? While dividend-oriented real estate investments offer attractive benefits, there are potential downsides to consider. Market volatility. Real estate markets can be subject to fluctuations, which can affect the performance of dividend-oriented investments. Liquidity. Although REITs offer high liquidity compared to direct property ownership, some private equity real estate funds may have lockup periods limiting immediate access to funds. Management risk. The success of dividend-oriented investments may depend on the expertise and performance of the fund managers or the property management teams. Tax considerations. Tax implications can impact overall returns, and changes in tax laws may affect dividend payouts. Can I reinvest dividends from my real estate investments to compound my returns? Yes. Many dividend-oriented real estate investment options offer the option to reinvest dividends. By reinvesting your dividends, you can potentially increase the overall value of your investment and compound your returns over time. This strategy allows you to benefit from the power of compounding, which can lead to accelerated growth in your portfolio. Please note that the information provided in this article is for informational purposes only and should not be construed as financial advice. It's important to conduct thorough research and seek professional guidance before making any investment decisions.